Right, hi everyone. My name is Richard Perry and I'm the market analyst at Handset Markets. And this is my latest non-farm payrolls webinar that I'm going to be doing today. We're going to be on for about half an hour, so it's going to be a pretty quick one. Just around the payrolls report, going to see what the report is looking at, and also trying to sort of make sense of it all, really. Before we get into it, let's have a quick look at the disclaimer. I'm hoping, I am recording this video today, so I'm hoping it's all coming through nice and clearly. I've had some problems with it before, but anyway, there's the disclaimer. Please read and understand that. I won't read it because I can't read that quickly. But anyway, so I will show it to you again at the end. Now, what we're going to go through today, obviously, what we're going to look for from the report, what could be the drivers of the reaction, markets to watch, and let's do some live analysis as well as the markets react. Oh, sorry, I've just seen a question from Mia. I'm very well, thank you. Now, I hope I've pronounced your name correctly, by the way. Anyway, right, okay, so payrolls today. What are we looking at ahead of the payrolls report? General market sentiment is unlikely, or certainly according to the Fed Funds futures, highly unlikely that we're going to get a rate hike in July. I think the market is fairly much certain that it's not going to get a rate hike until possibly December now. And I say possibly because the market is still uncertain in terms of how December's going to go. It's sort of been fluctuating a little bit. It was 50-50 about a week or so ago. Then we had that big move higher in the bond yields, and the pricing has improved for December. As other central banks have sort of seemed to start to move back towards the Fed in terms of market differentials and in terms of expectations for hiking rates. But in front of this meeting, there is pretty much no possibility of a rate hike in the July meeting. What I think the market will be looking out for is a couple of factors, really. Obviously, the headline payrolls report primarily, and will the sort of trend of weaker or weakness that we saw last month, will that be turned around? Also, average hourly earnings, I think that is the key. Average hourly earnings, will average hourly earnings start to pick up? Basically because average hourly earnings or wage growth is a key component, I think, in inflation. Now, there's been several studies that sort of talk about the pros and cons of looking at average hourly or wage growth as a function of inflation. However, my sort of rudimental understanding, I suppose, of economics would suggest if people are getting more money in their pockets, then they're going to be spending it, then they're going to be sort of pushing inflation higher. I think it does go hand in hand with that. So I think you see average hourly earnings pushing higher. I think that is a function of inflation, and you'll eventually start to see core inflation picking up on the back of that. Core inflation is the big problem in the States still. It is probably the one reason why, in my opinion, that the Fed cannot sort of decisively push ahead all guns blazing with the tightening. And at the moment, I think it is the big factor that is preventing that. So average hourly earnings is the other big factor in the payrolls report. We've also looking at whether we can sort of turn around the data from June. June data across the board pretty much in the States was pretty disappointing, actually. We've started July on a better note. We had the ISM data this week, which was better than expected. So it has sort of started to turn a bit of a trend around, and payrolls will certainly be a key factor in that. Whether that continues or not. As I said, 60%, around about 60% probability of a rate hike in December now. This payrolls report could be a decisive mover on the Treasury yields. 10-year Treasury yield has been significantly sort of moving higher on the back of sort of remarks from central banks in recent last couple of weeks from the ECB, the Bank of England, and also the Bank of Canada. Sharp move higher on Treasury yields on the back of that. Will that continue? That is the big question. So look for headline recovery. It was 138, looking for 179 this month. 150 or below would be, I think, considered as a weak payrolls report, or I mean, let's be sensible. I mean, there are different aspects of this payrolls report that we need to consider, but just in isolation, headline number 150 below would be considered weak. More than 200,000 is strong, but you could also then start to bring into question as we go forward and the US sort of starts to get back towards sort of full employment, what would be the natural consequence of that? Natural consequence of full employment in the States would be that you're going to be generating less jobs. So there is an argument to say that headline payrolls would naturally sort of drift lower in that argument anyway. Yeah, I've got a chart here. Where's my chart? Where's my chart? Where's my chart? That one. Come on. This is the chart I showed this morning in my morning report. Please come through. You're being slow. You're being very slow. Okay, fine. It's not coming through yet, but if that does come through, I'll sort of talk about it. Anyway, U6 unemployment as well. Here we go. U6 unemployment as well. Headline payrolls have been drifting off in 2017. U6 unemployment, underemployment, which is what it's called, is sort of been dropping away. Look at this move. It's sharply lower actually in 2017, which would suggest there is perhaps still some further slack in the market, in the labour market, and perhaps the Fed is tightening too quickly. Perhaps the Fed has overestimated what full employment is in the States. I mean, they keep talking about the fact that the Phillips curve, 4.7 was the expectation of full employment, whereas 4.3% at the moment on unemployment, on the headline unemployment. U6 unemployment is dropping away. It was 2006, 2007, 8 to 8.5%, 8.4% on U6. If that continues to drop away, is the US really at full employment? That's the question. Also, labour market productivity. What am I talking about? Labour market participation rate. Participation rate has been sort of there or thereabouts between 62.5, 63%. If that continues to trade in that range, maybe the market has reached a level at which, I say trade, if it sort of remains in that range, maybe it's sort of reached a level and the market is sort of starting to sort of get more interested, and maybe sort of people who left the labour force will start to flood back in. Now, increasing in the labour force participation rate, that increases the pool of labour. Therefore, subsequently, if the jobs are not being created, that increased pool of labour will increase the unemployment rate. So there are arguments to say that increasing participation rate is negative for unemployment and pushing unemployment higher. So we need to factor in that as well. Revisions, downward revisions would obviously be negative to the 138 or 174 last of April, and an upward revisions would be positive. Okay, so the implications of the report. With no rate hike imminent, expect general volatility. I think that is the case, but I think we could also see a strong report solidifying expectation of a December hike, and that would drive dollar stronger. That would also sort of drive yields continuingly higher, and that would be the supportive move for the dollar. So the strong report is the with the driver of a stronger dollar, and the weak report as driver of a weaker dollar. Now let's go into other aspects here. So weaker report, that would be, as I said, pretty much focusing, I think, on not only the headline but also average hourly earnings mainly, would be dollar negative, and positive for safe haven. So you'd see the market moving back into yield. So that would start to see the 10-year Treasury yield falling away. Currently about 2.39 on the 10-year yield, and also the yen would be strengthening, the gold price would be strengthening. The yen has been under pressure today, the gold has been under pressure today. Both are approaching their key levels from May, and it would be interesting to see if those levels would break on a strong report or hold on a weak report. It would be interesting. So you're looking for Forex, dollar weakness, yen strength, Aussie and Kiwi volatile on a weak report, mainly because I think it's difficult, because obviously the dollar weakness would be the main driver of those Forex pairs, but also the risk sentiment would be hit as well. So you'd see volatility through dollar, Aussie dollar and Kiwi. Breathe. And commodities, that would be gold strength. Oil volatile, because again, a weak payroll support would be dollar negative. That would sort of generally tend to see oil supported. However, you would also see in that situation, you'd see sort of the oil price sort of under pressure because of the lack of growth, arguably through a weak payroll support. And indices, interesting. I think this could be a payrolls report whereby if you see payrolls stronger than expected, or the whole report stronger than expected, I think indices could come under pressure because the indices have been dropping in recent days. Certainly the Eurozone numbers have been, or indices have been dropping. And that drop has come as the tightening has become increasingly likely. So I think this is something that we need to be mindful of. So an inline payroll support, I think choppy generally, higher and lower, and a strong payroll support would be driving, as I said, dollar strength, pulling yields ever higher, gold and yen under pressure. And also would be a trending move, continuing the trend that we've seen in recent weeks would be the likelihood out of a strong payrolls report, and basically help to solidify the expectations of a December Fed rate hike. Basically because the questions surrounding December were coming off those off that sort of string of June data disappointments. And if we start to see July picking up again, that would be positive. I say this every time, mind the spike, because you get different aspects, and the algos will react generally off the headline payrolls number. But if the headline payrolls number and the average hourly earnings are sort of in contravening each other, then it would be a spike one way and then a retracement likely. Now, if you get a definitive strength of report or definitive weaker report, then I think you're going to see a trending move. So that would be the outcome there. But generally speaking, what you do tend to see is a sort of a move in the direction of the headline payrolls number, and then you start to see a retracement, a little bit of a pullback, depending on the strength of the report would be depending on how big the pullback would be. Say, for example, if the report is pretty mixed, you're likely to see a full retracement. If the payrolls report is a little bit, if the payrolls report is pretty much strong across the board, you're likely to see a bit of a pullback, but then quickly sort of moving back in the direction of the data surprise, either stronger in the case of the dollar on a strong report, or weaker dollar would be driven by a weak payrolls report. So where are we? Got 2 minutes to go on my clock. So let's get the data. Where are we? Data. Here we go. And we'll get a few charts. Here we go. Right. So we're not a million miles away from the payrolls report as we speak. Also looking for revisions as well. I sometimes sort of miss the revisions, but revisions are key. So revisions to last month, probably specifically being the factor there. So just got about 1 minute to go on this. So what I'm going to do is I will get the number, and then I'm going to tweet about it. It's going to come through pretty much now, I think. Come on. Right. Okay. Strong headline. Big revision upwards. What am I looking? Unemployment ticking higher. Labour force participation ticking higher. So ticking higher in the labour force participation rate. Unemployment ticking higher. Underemployment higher, so that labour force participation rate hitting that underemployment, maybe full employment is coming through. We're seeing the immediate reaction on these markets, dollar strong, but rebounding, interesting rebound. Why are we seeing the rebound? Average hourly earnings miss. So you've got the headline that's good, you've got the participation rate that's higher, that's positive, you've got the unemployment rate, doesn't really overly matter because it's still so low, but you have average hourly earnings which have missed. So that is why you're going to see a bit of a, I think, a bit of a mixed reaction. The market not entirely convinced in the immediate sort of reaction of dollar strength, but then you're seeing euro dollar. Look at euro dollar pushing higher, 30 ticks. So that is interesting. You've got a mixed payroll support purely because of that average hourly earnings. But I think you're going to get some choppy moves on the back of this. Right, so you're seeing, yeah, dollar yen lower. So you're seeing that the dollar, not really entirely sure how to react. Look at that. The average hourly earnings lower. That doesn't help inflation. So you're seeing the DAX higher. You're seeing the Aussie dollar stronger. You're seeing gold, which spiked initially down, but then has pulled back. So yeah, it's a bit of a little bit of a mixed payroll report, despite the fact we've got the strong headline. Let me just tweet about this. Give me a sec. Just watch those initial reactions coming through on this market. So let's just, where are we doing there? You can see a few of the data points. Whoops. There you go. Right, there you go. Now, okay, let me just tweet about this. Payrolls. Oh no, lost my, what was it? There we go. Sorry everyone. Right, not on payrolls. 222. I really need to learn how to type fast. Faster. Right, okay, so where are we? Yeah, still not really reacting. The market is still trying to figure out exactly how to play this one. Bit of a mixed bag because of that average hourly earnings, I would say. Pretty much everything else is good. 222 is a pretty decent number. Did I actually write 222 or 220? Gosh, dear me, what am I doing? 222, right, sorry. I mean, just looking at that, it's just not convinced, is it, the market? Sort of on euro dollar, about 30 odd ticks, about 20, 30, 25, 30 ticks up. Aussie, again, a little bit higher. Gold is now rising. I mean, the market is taking this a little bit negative, dollar negative, and I think that average hourly earnings is a problem because the market is just continually being underwhelmed by inflation or inflation signals in the States. Subsequently, we're seeing gold rallying, gold testing that initial resistance around 1223. So DAX is higher. So equity markets are finding this as a positive. What's that? I say higher, 20 ticks. So it's not especially anything to get overly worked up about. But yeah, we are seeing these equity markets pulling higher. Gold, let me just put it on a 5. Okay, that doesn't do a great deal, does it? Hourly, yeah, you've still got the resistance 1225 and the resistance 1229. That was the key resistance this week, 1229. So that's the one to watch out for. But at the moment, there's a positive reaction on gold as the dollar has come under pressure. I wouldn't necessarily think that this is going to last. I mean, you might get a bit of a. I think this is enough of a mixed payrolls report that would suggest we're going to get a pullback. So you've had the initial move higher. I think this could well be a payrolls report that we see a pullback on, and maybe an unwinding move. So I don't think this is not going to be a trending move. So, or my expectation would be this is not going to be a trending move. I would say this is likely to unwind, because you do have that headline payrolls number that is a positive. So yeah, I'd say this is more of an unwinding payrolls report, and you're seeing euro dollar starting to tick lower. It's not a massive move. It wasn't a big move higher in the first place, so I think the markets are just going to chop around on this one. I wouldn't be surprised to see 1370 on dollar yen, let's say 29 figure on euro dollar, 14.15 on, sorry, 29 figure on cable, 14.15 on euro dollar. I wouldn't be surprised to see these numbers coming through. I don't necessarily think that that pull higher on gold is going to last. Let me see. Yeah, look at treasury yields. Treasury yields were up at that high, weren't they? 240. The market's come off, so that means that markets sort of pushing back into treasuries a little bit on the back of this. So it is market is deeming this at the moment as a bit of a mixed payrolls report, bit of a initially a dollar weakener, and pushing back into treasuries. Looking at that euro dollar just ticking lower marginally, not a lot. Yeah, 29 figure has now been seen on cable. These are very small moves though, in the sort of context of where we sort of tend to see. Yeah, let's put these charts onto 5 minutes now to give you more of a look at the overall picture. Yeah, I mean, yeah, look at dollar yen unwinding, Aussie unwinding, gold yet to properly unwind, but just ticking back lower from that 1227 level. Even the DAX starting to come off. So yeah, I think these little moves are going to unwind. It'd be interesting to see what happens as the market settles after about half an hour or maybe an hour, because I think this is, generally speaking, a bit of a sort of a sideways move. Yeah, I don't think this payrolls report gives you much on December as a hike. It is a better headline, which I suppose ends a bit of the trend of and labour force participation rate higher. That's positive. Unemployment, as I said, I don't think unemployment sort of hanging around that sort of 4.3, 4.4% does a great deal. U6 unemployment at 8.6, I think it could well be that we start to see the U6 sort of settling down. So in terms of your employment numbers, I think it's fairly stable and arguably approaching that sort of full employment level, and certainly the labour force participation rate ticking higher has fed into that. However, as I said, the week average hourly earnings are an issue. So yeah, we are pulling lower, just marginally lower on all these numbers here. Aussie back towards sort of 76.05 area. Gold unwinding, DAX unwinding now. So yeah, this sort of is playing out with regard to what would be consistent with a fairly sort of neutral payrolls report. Yeah. So how does this affect the bigger moves? Let's go bigger, hourly. Just a bit of chop around that. Daily. Nothing on the daily at all, is it? Hourly, just a bit of volatility really. Basically where it's been trading all day. Just noise on the euro. Cable. Yeah, nothing really doing there. Big weakness on sterling today on the back of that industrial production number. Seen a bit of a turnaround on this payrolls number. I say disappointment. The disappointment came through the average hourly earnings. But yeah, I don't think this is enough to really change any sort of trends. Look at the Aussie, completely unwound now. Gold back towards 12.23. 12.22 obviously was where it was trading just prior. to the number. DAX unwinding. Very small. We are talking very small moves though on all these charts. Very small moves. Little real direction. Just noise. Just just noise at the moment. So yeah, I think it'll be interesting when the US comes in. Well, I say comes in when the US really sort of takes over and reacts through the afternoon. Whether we get a trend of dollar strength continuing, because yeah, look at this 10-year Treasury yield, almost back towards 2.39 again. So it is a bit of a choppy move. Now that Treasury yield, 2.42 was the May high. That's a key level. Those May sort of levels, those May sort of turning point levels are key on across many charts actually. Let me just show you my main board and subsequently dollar yen, that May high, 114.35. Are we going to see that? Maybe not on this payrolls report. Maybe not on this payrolls report. Gold holding up above 1213.80. Again, the key May low. These key turning points. I don't necessarily think this payrolls report does anything to change it. We've got trends going on. You've got a downtrend on gold. You've got an uptrend. Whoops, wrong one. You've got an uptrend on the on dollar yen. And I don't think this payrolls report does anything really to change around those recent moves. So, any other charts that you want me to look at very quickly in the reaction? Let's look at oil. Has there been any reaction on oil? Oh no, I've got oil delayed. That's so annoying. Okay, so let's look at silver. Crikey, what's going on there? Let's do that on an intraday. Well, that was sorry, I hadn't looked at the silver chart this morning. It's a very interesting move. I don't know whether that's a gammy. No, it must be a gammy trade. Okay. Yeah, no real move. Is it on silver? No real move at all. Other markets. FTSE 100 has been testing, hasn't it, that key uptrend, and it is holding on still, isn't it? It is still holding on just that uptrend of the last 6 months. Is an uptrend within an uptrend, I should note, within the big uptrend channel. It's not actually at the uptrend channel yet, but it's at the 6-month uptrend. FTSE it's still holding on to that, arguably, even though yesterday's move did spike through it. Okay, any other charts I can think of to show you? Let's go Kiwi. NZD equals. Kiwi sort of initially pulled higher and just unwound. It's just still, I mean, I sort of mentioned Kiwi in my analysis, my daily analysis, that sort of was moving sideways, having broken that uptrend. But it certainly looks as though the market has sort of taken on a bit of a, as I said, a choppy reaction to this. It seems as though that the euro dollar has settled, as I said, around that 114.15 area. It started to find a bit of support and pushed a little bit higher. Cable settling around that 129 area. Dollar yen 1370 was a bit of a yeah, it's actually unwound back to it. So that, I mean, that the yen weakness today seems to be more of an issue. So yen is continuing to underperform. Yes, yen continues to underperform, and that comes after those Bank of Japan operations that we saw this morning to buy into longer dated 10-year JGBs, which helped to weaken the yen. So that remains a bit of an underperformer today. The gold price has unwound and just finding a bit of a level again around 12.23. Aussie dollar has been a little bit choppy, come back to 76, found support around 76. I mean, these moves that we've seen on this Payrolls report are basically all around this sort of mixed payrolls reaction that we've had, that lack of real trend. So yeah, I think I'm going to leave you at that point. Let's just show you the, there it is. So yeah, you can get my daily research at handtechrich.com. Follow me on Twitter, handtechrich, LinkedIn, Forex Traders Talk. So yeah, join me again next month for more payrolls trading. And I said last time I had this payrolls report trading webinar that I was going to do a trading webinar on a daily basis. I'm still planning on doing that. We are still annoyingly in the throes of trying to get a new website up and running. These websites always take longer than you anticipate, so I am going to be doing a trading webinar on a daily basis going forward, or certainly in clutches of days. I won't do it every single day for the rest of my life, but yeah, I will be doing NAS. I use Reuters icon. So yeah, that is that. So I will leave you now with the disclaimer, and you can then read and understand that. And with that, I wish you good luck in all your trading, and I'll speak to you next time. Thank you.